Good afternoon, guys. My name is Rob Pietropaolo, otherwise known as Robbie P. I'm a private client trader at Vunani Private Clients, and I'd like to welcome you all to the JSE webinar, where today we're going to be talking about how to use technical analysis in your investments. Right. Now, what I hear a lot is that guys look at charts and kind of don't really understand what they mean or what they're saying. So a lot of my clients specifically go, well, I can't read charts and that's your job. But that really doesn't help them with their investments when they start asking what went wrong, or why is this price going down, or why is the price going up, or should we be buying this right now, or should we be selling this right now. So today I'm going to show you in a very concise toolbox how to understand and read a chart and get the most benefit from it in your investments. So anybody can read a chart if you know what you are looking at. So what is technical analysis? So while fundamentals drive stock prices, and by fundamentals that is changes in management or the profitability of a company or lack thereof, the use of technical analysis is everything you need to help you better time your entry or your exit. So all technical analysis really is a visual interpretation of price action or of a stock or an index price behavior. So the best strategy is to trade what you see, not what you think. So your strategy must be simple, it must be easy to understand, and more importantly, easy to implement. And by implement, I mean you have to have a plan. Okay, so a technical strategy that I'm going to give you now is a boiling pot of a few ingredients that are going to help your soup taste better in your longer term investment. Guys, charts help you cut out the noise. Okay, so as an investor, you're a little bit longer term. You're in it for the long haul. So by cutting out the noise, by using your charts, you will know when it's time to either get in or out of a bad trade. So what are the elements of a good strategy? Now you need to understand yourself, but also understand what the charts are telling you. And this is where we start. So firstly, you need to understand what is your time frame. How much realistic return on investment do you want or can you expect from an investment? How much are you prepared to lose? Very important. A lot of guys get stuck in very bad trade, and we refer to that as being married to a trade. And sometimes my boss even sings, he fell in love with a hopeless trade. So make sure you don't fall into that trap when you start looking at investing. Very important is to set entry, take profit, and stop levels when entering a trade, because it takes a lot of the emotion out of a trade when it goes wrong. Trade liquid instruments. You need liquidity. It must be easy for you to get both in and out when you want to take profit. But we'll discuss that a little bit later. And wait for confirmation of direction. Direction is very important. As a longer term investment or investor, you don't want your direction to be down. You will want all of your investments to trend upwards. A trend that's going down, or a trade or a stock price that's going down, doesn't benefit you at all. So this is all part of the plan and the elements of a good strategy. Taking profits early if market conditions dictate. A lot of you guys would have seen or heard on the news wires that this was probably the worst September-October trading period in the last 30 years in the US. And that of course affects our markets and indirectly our instruments, or directly our instruments. So if market conditions aren't conducive to getting into investments, you should stay out. And if you're in, probably not a bad idea to get out until conditions settle. In other words, we're going to trade what we see. So let's go back to time frame. So time frame would dictate what chart you need to look at, and it helps for you to identify what point or part of the trend or price move you are in. Now charts are very pliable. You can look at the daily price action, weekly, monthly, right up to yearly. And all of these little bits of information are very important to help you time your entry into the market, because a lot of guys do go by the prophecy of it's time in the market, not timing the market that makes you money. But I'm going to show you how to best guess the best time to get in the market and stick with it for the long haul. So first of all, I prefer to use candlesticks. Now this slide just is an explanation of how candlesticks work. Now each of these bars is referred to as a candlestick. And what each of these candlesticks tell you is very, very important information. So first of all, they give you what the high of that time period was, the low, the open, the close, and how much volume traded in that session. Now, as per the previous slide, your time frame is what matters. So if you were looking at a daily chart, each one of these candlesticks would have been the session information for that day. Similarly, if you were trading a weekly chart, every single candlestick would contain the data that occurred in that week. In other words, the open of that week, the close of that week, the high and the low and the volume traded for that entire week or month. So depending on what chart you're looking at, this is what all of these candlesticks will explain to you.